Good evening from Kigali, Rwanda. You're still watching the CNBC Africa coverage of the World Economic Forum for 2016. Like I said, right here in Kigali, Rwanda. We've had a lot of conversations that have centered around the theme that is that of digital transformation. And we'd like to shift our focus a little bit to just marry tech and finance and see exactly where this leads us as far as the African money flow is concerned. I'm very privileged to have people who run these very sectors right here in East Africa. I'd like to start with his introduction. Tongai Maramba, he's the Chief Executive of Tigo Rwanda. I also have Diane Karusisi, Chief Executive Officer at Bank of Kigali. Ephraim Ruamwenge, CEO, Rwa Business Group. My name is Bonnie Tunya. Gentlemen and lady, we've been treated to a lot of conversations today about the whole digital conversation. But at the core of this is payment systems that affect our daily lives. I'd like to start with Tongai because whenever it's talking about leapfrogging or Africa transforming, they talk about Tigo Pesa, they talk about M-Pesa, they talk about mobile money, which is a success in Africa and nowhere else in the world. Give us a sense of what is it about the African market space that facilitates or makes mobile money and money transfer systems thrive.
Thanks, Bonnie, and thanks for having me here. I mean, I think it's just a question of the right product for the right customer at the right time. A lot has been made of the successes of mobile money in East Africa versus in other parts of the world, other parts of Africa, right. And I think it really just boils down to: are you addressing a deeply felt need for a consumer, and does it make sense for them? Is it creating value for them? And I think with mobile money as it is today, we hit a sweet spot and we solved a very big problem for people. I think there's more to do, and I think the opportunity is there to really start to drive that convergence between technology and today we're talking about banking, but technology and many other services, right. To create this thing called the digital ecosystem.
Dan, there's a lot of pushback when the thought of mobile money in the banking space, and there's a lot of opposition, particularly in Kenya, and people are saying, no, we need regulation. Maybe it's not too safe, it's not secure, we're not sure about this. That went round the block, and there's a happy marriage now between tech and mobile. But is there something peculiar about how East Africans trade that makes this relationship thrive?
Yeah, I think the way banks are looking at this, high technology and banking, it's very important because if you don't want to embrace technology, then you'll just be left behind and you won't be relevant in the future. Right. So the way we banks are looking at it is, this is an opportunity. We are open. We are looking at what's coming. We are open to changes. We want to collaborate. We are discussing collaboration with the telcos and other telecommunication companies, and we are ready to invest because if you want to, upgrade the services, if you want to respond to the needs of your customers, you have to be ready to invest. And this is a conversation we're having with our colleagues in the banking sector, but also the tech companies. We are open and we are ready to invest.
All right. Ephraim, let's talk to us a little bit about how this relationship enables businesses, because we've talked a lot about it, about how it enables daily life and retail and how I can move money around and send to relatives. But give us a sense of how big a deal is it when it comes to businesses?
Thank you, Bonnie. It's a massive deal because most of the transactions, for example, my business, we do them across border. Traditionally, we would have to take a payment order to the bank, give it to somebody, we'd have to wait for it to be processed because there's a backlog. Then payment is made, and then there has to be confirmation. Somebody has to physically go check whether the money has been received because they never got confirmation via email, via text. And that wastes a lot of time. Even the risk associated with that is a bit high. Right. But now you can see that there has been a drive for the use of internet banking, mobile banking, and then even the use of mobile wallets. Across the region, when they introduced, telecommunications introduced the ability to send money from one country to another. Right. We were able to buy some goods from Kenya, and we paid via mobile money, right, as a company. So people should never discount the value of technology in the movement of money or in payment in business, because it's at the heart of what we do as business people.
Right.
Yeah.
Let's talk about the elephant in the room, which is the cost of moving money around electronically. Everyone says it's faster, it's secure, it's all this and that, but it's very expensive. I mean, you get, and there are many conversations about paying money to send money. Will we get to a point where we actually see a very intentional reduction in this? And this is focused on you, Tongai, because especially sending money via mobile platforms, it's very expensive. Give us a sense of what the future is like.
So, you know, I think, and again, it goes back to your first question about what's been driving success in the region. You need to be creating value for consumers. And, you know, one point of view may be that, you know, we're paying money to send money. But if you ask someone, you know, you have 10,000 francs, you're sitting on one side of Kigali, you want to get it to the other side of Kigali, how are you going to do that at no cost? How does that happen? You know, you have to get on a bus, you have to get on a taxi, you have to get something that moves you to the other location. And very often what you find is that, you know, the fees that we have today on these kinds of services are more or less aligned with that. You know, when we're developing the business model, we're saying to ourselves, how do we create a use case that makes sense in terms of value for the customer? So if the customer will say to me, well, look, you know, it's going to cost me 5 times more to use my phone to send this money than it is for me just to, you know, get on a motor taxi or get on a bus and take it to my friend, then the business model doesn't hold together. But I think, you know, the way that we're pitching this product is to make sure that we're creating value, which is to say that it's costing you less to do these transactions. Right. And it does cost you, it costs you money to work with money. I think that's a fact, and I'm sure Diane would agree with that. And the key is that when you build the business models around this, you need to have a very good understanding of all of the value that's associated with a particular transaction, because it's not just the cash that you're spending, right? Yeah.
Dan, and he threw that to you, and I just like to get to the point of going forward, what is ultimately going to drive the whole electronic money or money in tech movement? Is it going to be the price, the cost of moving it, or security? What are some of the factors that are going to drive this trend?
First, I would like to say that the costs of doing cash transactions is even, I mean, it's much higher. Right. So we have to come from that point and see what was the cost of doing cash transactions, right, and what are we gaining. Of course, individually people gain because, you know, as Tongai is saying, people spend less because they don't have to, you know, take a motor taxi and go to the other side of the city. But also for the system, for the banking system, we have more money in the system because we have less cash, you know, hidden, you know, under mattresses. Cash is in the system, in the economy, and we have more deposits in the system, so we can even lend more. And in time, even lending will be cheaper because we have more money in the system. So for the system is, you know, doing better. People are doing better, and when you look at the uptake of this product, it shows that you know, people embrace these technologies.
There's a lot, Dan, there's a lot that obviously has been talking about how this has changed our lives, but has it empirically improved the saving culture?
It's coming, because for us, a bank, the core business of a bank is to take deposits and to lend. And now, with the, you know, these new technologies, people are now able to deposit using their mobile money, their mobile phone. So this is something that we'll see, and we are happy to see it coming because we'll have more deposits. And in time, we also see our customers, you know, borrowing from their phones, because you don't need to go to a bank, enter this very intimidating banking hall, you know, have a...
This is not Bank of Kigali.
Still, you know,
right.
and you know, fill a form and, you know, come with all these things that are required. I think in, you know, in no time, we'll be able to have applications where people can apply online from their phone and get the money, maybe even disbursed on the mobile wallets. Right. So this is also coming, so we are looking forward to enter that business.
Let's have Ifram, you're a user of some of these platforms that they're pushing around. How big a deal is cost for you when you're choosing a money transfer system? How high does cost rank?
So I'm in commodities.
Right.
Small margin business. So every percentage or 0.1% counts. So normally it's, again, the cost there has to be value behind the cost. We don't just spend money for the sake of spending it. So for us, we look at what you're trading off, you know, the trade-offs. And for us, it's about risk. We had a situation where we didn't pay using the proper channels of the bank, and we lost $5,000 on one transaction. And that's money we have failed to get back. And for us, we are like, would rather pay $200 to save that $5,000. Right. Yeah, but the idea is that it should never at any point be something that is beyond, I think for the banks and for the providers of such services, the idea is that they should not make it, they should also manage their margins. There should be a balance across board, you know. Yeah.
You should look at the margins. That's what it's trying to say. But let's talk about how inclusivity, in the sense of, it's very easy if you're in Nairobi or Dar es Salaam or Kigali to move money across on your smartphone, or to interface your bank account and your smartphone, which you all do now. Yes. But in terms of inclusivity to the rural areas, how what is the penetration like right now?
So 40% of our customers today are using our product Tigo Cash to store money, either in a savings account, which we have, which pays 7%, or just in the wallet, or to transfer or to buy products. So, you know, roughly half of our customers are, and we have 35% of the total market in the country, roughly half of our customers are using this service. It's penetrating into the rural areas because it is, as Diane was saying, it is a service which is simple. It is not a service which is intimidating or designed to be intimidating. It is very accessible. And it is also a service that you are able to deliver in a way that's quite different to traditional financial services, which is in the sense that, you know, we use an outsourced distributed distribution model, which means that we have agents all around the country. These agents are people who come from those communities. And so, you know, when you go to sign up for the account, when you go to do a transaction, when you need help and advice on something, you're talking to someone in your community, right? Which makes it much more accessible, makes it much easier for you to engage with them. And I think that, you know, that's been one of the secrets to it, is just being able to make it something that's locally relevant and locally accessible to the people in the area where they need it.
I'd like us to put a pause there because we'll revisit the whole question of inclusivity right after the break. But you're watching the CNBC Africa coverage of the World Economic Forum here in Kigali, Rwanda. We're interrogating the question of how can payment systems leverage on technology for Africa. Stay tuned. Every time we tell people we're recording, they say, no, can we do better? You know, I think. Welcome back. You're watching the CNBC Africa coverage of the World Economic Forum here in Kigali, Rwanda. And we've been having a conversation about how payment systems in East Africa can leverage on technology. I've been speaking to Diane Karusisi, Chief Executive Officer of the Bank of Kigali, Tongai Maramba, CEO Tigo Rwanda, and Ephraim Ramwenge, who is the CEO of Raw Business Group. Gentlemen and lady, we left the conversation at the point of inclusivity, and we said, yes, tech is good. Tech has been embraced, but it hasn't quite reached everyone. And let me just kick this off with Diane. It gives a sense of how then do we bridge this? Because there's clearly a divide. I mean, if you look at across the East African markets, this trend seems to have favored the middle class and the folks in the cities. But there's a lot of business in the rural setting that doesn't seem to get this. How do we bridge that?
Yeah, I think technology is bringing efficiencies, is bringing security, and is lowering the cost for us to do business even in rural areas. Right. For us now to open a branch, you know, very far from the center of the city in Kigali, it's now simple because we have systems that are integrated. So whatever transaction is done in Cyangugu, we can see it in our system immediately. So this is helping us because now there's no risk to do business in those part of the countries. There's no, I mean, it's efficient, it's very quick, and we can control everything centrally from Kigali. So when you look at payment systems, again, you know, it's making things very easy for people to transact because from the comfort of their living room, they can, you know, pay their taxes, they can buy goods, they can pay for utilities and, you know, for water, electricity, etc. So I think this is all bringing a lot of efficiency and you know, even reducing the cost of doing business for everyone.
Right. Ephraim, you'd weigh on that as well, but also like to bring in the point of, so trade is good, trade is expanding, we've gone electronic, we've gone tech. But we still face quite a bit of challenges when it comes to cross-border transfer of cash. Yes, there's M-Pesa and there's Tigo Pesa across Kenya and Tanzania and Uganda and Rwanda. However, there's a lot of trade that is impeded still with this whole cross-border barriers. Give us a sense of, has that been a challenge to your business? But also you can weigh in on the issue of inclusivity.
Okay, I'll start off with inclusivity. When you look at mobile wallets, they have really taken off. I know many people who don't have bank accounts who have mobile wallets. Many of the people we pay salaries to don't have bank accounts, but they have mobile wallets. The only issue I've seen is, in its true sense, mobile wallets are not cashless. They are just a platform for trading, for transferring, sorry.
At some point, you still need to have some cash.
You still have to go somewhere and collect the money.
Right.
And I had a chance to talk to somebody within Diane's organization. I was telling them that the trick would be to create a way for people to spend more or spend easier used from their mobile wallet. Right. You know.
If they effect that, please, send them an invoice.
No, I will.
Yeah.
I will. But the idea is that that's the only way it will truly take off. Because mobile wallets have replaced banks, but not so much, because they only have one functionality of what a bank account has.
Right.
So you talked of loans. It would be brilliant because most of us use our phones. If you can track somebody's usage of their phone and the way they interact with airtime and the way they interact with their money on that wallet to determine their credit rating.
There's a bit of that in some platforms across the region.
Yeah.
However, let me just jump in and include the issue of traceability, because whilst there are loans on these platforms, it's still a headache to track these people, because most of this are pegged on your credit worthiness, which is based on your use. I'd like to hear your thoughts, Dan, about how then do we advance this, because while I'm trading, I would like to be advanced some credit. Is that a frontier? Is that a challenge that you're facing?
You can look at it as a challenge, but again, if we are ready to collaborate with the telcos, it's no longer a challenge. Because of course for us, we have a lot of information, a lot of data on how, the loans we give to people and how they pay back their loans.
Right.
And Tigo, for example, knows, for a particular customer, Tigo knows how much that customer spends on airtime, how much the customers, transacts daily or monthly. So if we are able to share this information, then we can know for that customer, credit worthiness is, this high.
Right.
We can lend up to this amount because you're able to estimate the income of the customer.
Right.
So getting this data together, and with the new technologies again, mining the data to make the data, talk
Right.
to you and tell you
Right.
this customer needs this amount of money. I think it's really the future for us.
Does Tigo have systems where they advance credit to members, to their customers? And how then do you track this?
Yeah, I think I would start with your point that, is this too difficult to do? And I would say, the answer is no. Let's understand that there's a consumer need out there, and then let's solve for that issue and that question. And as Diane is saying, there's ways to get around the question. So we do have information about the spending patterns of customers with our products. We have information about their locations and who they interact with and where they go. So we have a lot of data.
Right.
What's going to have to happen, because we haven't been in this space ever really, is that we're going to have to start to learn how to use that data to become intelligent about what we do if we're going to create products where people, for example, get access to credit. Right. And I think to a point that Ephraim made, which is related to that, and maybe I may owe you an invoice for this. The idea is that you're going to create real value. You're going to take mobile payments, digital payments, mobile financial services to the next level when you create an ecosystem. When you have, all of the banking partners, all of the MFIs, everyone in the financial ecosystem integrated to each other, so that a consumer doesn't struggle to move money from one place to the other, because you're exactly right. It's not cashless, right? If I want to take my money from Tigo Cash to MTN Mobile Money, it has to become cash first, right? And so those integrations is what's happening now. We're going to be launching integrations. We're already integrated with Bank of Kigali and a few other banks, many MFIs. And those integrations are the ones that will enable us as partners to start to build a lot of these products. credit products, savings products, etc. That's the real opportunity, I think, there.
Right. We just have about 5 minutes to go. Before you give me your closing comments, I'd like to hear this from Ephraim and the rest of us. There have been conversations about digital currencies in different parts. We had a situation in Nairobi where the central bank said, hey, we're not regulating this, keep away. So they basically told people, stop this. I thought that wasn't a very wise move. You can't stop where innovation is heading. Give us a sense of what is your feeling about digital currencies, and are we ready as East Africans, and what do we need to do to get ready for that?
I'm a big fan of digital currencies. I'm a big fan of blockchain technology, bitcoins and all that, but I feel that it needs, like most technology on the continent, it has to have a reason, right, or it has to have relevance. I think there has to be a reason why we're using the digital currency. I will not say for the camera, but we are trying to find ways to create platforms where digital currencies are exclusive for that particular platform, right, and it should be relevant. So if it's trading across borders, why not have a digital currency for that to avoid the forex risk for the businesses? Right. So I would say, yes, we are ready, but we need to have a reason to use digital currencies. Otherwise, we're just messing with something we don't understand. Right. Yeah.
Dan, I'm not sure you are excited about Bitcoins and all those other coins in your system.
I mean, I'm watching this, right, and I think it's very interesting. And I think if at all there's a place where we need these innovations is Africa. Because if you look at
that's the first. Our central bank governor doesn't like them.
If you look at even the bank population in Africa is still very low. If you look at the cost of cash transaction is very, very high. So and for this technology to really, get to where it needs to go, I think it has to start in Africa. In Europe, it's only, and in the Western world, it's only because it's secure. But when you look at our transaction, we've also made sure that things are more secure than they were in the past. But if we really want to take things to another level, I think digital currency is something, I'm very open to it.
All right, Tongai, the absolute final word. What's your view about the whole digital currency conversation?
So I think it's indicative of something else that's going on, which is the internet is creating a very subtle change in the way that we need to think about business and opportunity. Bitcoin is a currency that's being created to solve a problem that's not currently being dealt with by real currency, if you like. And I think that's a lesson for us, because if we're not careful, in all of our areas, there's going to be something else that's created by the internet that takes care of what we need. But also, these innovations are creating tremendous opportunities and value. Blockchain is not about digital currency, it's about trust. And it's something that can actually create a lot of value even in a banking system, if you can do it. And so, the internet presents all of these opportunities. And I think for us as businesses, we need to start understanding, what are the subtle implications of that for us in terms of our consumer relationships and in terms of the way that we think about developing products. And I think digital currency is a great example of what can happen.
We don't have a currency problem, we have a trust problem. Gentlemen and lady, we have to put a pause there, but many thanks for making time to engage in this conversation. We've been spending the last half hour interrogating East Africa's payment systems and how they are leveraging on technology. I've been speaking to Tongai Maramba, who's the Chief Executive Officer at Tigo Rwanda. I've also had Diane Karusisi, Chief Executive Officer, Bank of Kigali, and Ephraim Rwamwenge, who's the Chief Executive Officer at the Rwa Business Group. My name is Bonnie Tunya. Good evening.